Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first and only global virtual incubator and accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP, and 10 million jobs. And in support of this mission, we have been doing roundtables for a long time. We've done almost 270 roundtables at this point, and these are the free public roundtables, and we've done many more than that in our private sessions where we cater to the premium members of the program. So this method of online mentoring is something that we have adopted very, very heavily, and we have kind of perfected, you could say, because now the program is coming up to its completing 5 years in existence. So it's been a successful program, and we've trained a lot of entrepreneurs through this. So definitely we've learned a thing or two here. The event is being recorded. You will find the recording in our on our blog as well as on our YouTube channel. If you're live tweeting the show today, which we strongly encourage you to do, please use hashtag 1M1M. And you can find us on Twitter at 1M by 1M and at Romana, and we have a ton of very, very interesting, cool content that we share through these channels. The YouTube channel is 1M1M Roundtables, and you will find recordings of every single session, prior session here, and this is very, very interesting content. Especially for the last year, every session we've had a guest, and in almost every session we've had an interesting guest and an interesting conversation on an interesting topic related to startups and entrepreneurship. And we're going to be doing the same today. These are the call-in instructions. We're not quite ready for call-in yet. I will put these up again when we are ready, but please do think of the questions you want to ask, and you can start using the public chat to file your questions, and we will definitely get to them. That's a promise. Today, we are going to talk to Christian Blume, CEO and co-founder of Cleverbridge, and Christian is based in Germany. So we try to, as you know, we are a global accelerator, and we try to give you as much of a global perspective as possible. And so we welcome Christian to be with us today for the first half hour of the presentation. And I met Christian just a few months ago, maybe 6 months ago or something like that, and found what he's doing fascinating, and it's a unique perspective that I want to bring you through this discussion with Christian. Welcome, Christian. Thank you for coming to the show today.
Thank you for having me on, Romana.
So, Christian, one of the things that I want to highlight today is your very different perspective than what we see in Silicon Valley about entrepreneurship, where we would almost feel, if you were in Silicon Valley, you would almost feel that entrepreneurship equals financing, entrepreneurship equals exit. You have a completely different perspective than that. So that's what I want to showcase and discuss and really get to the heart of. But let's start by introducing our audience to what Cleverbridge does and what your business is all about. Please position your product for us.
Okay, so what we do is we're a full-service e-commerce provider for the digital goods and service industry. To us, it doesn't really make that much of a difference if we're talking about a once-off transaction or if it's a recurring transaction or whether it's subscription billing management, and we do all of that on an international basis. I think the simplest way to have a look at us is, and this is how we started almost 10 years ago, is when you access a website where there's a buy button located on it, you press the buy button, you get redirected into the order process, and everything that basically happens behind that buy button is what we do. So we capture the personal identifiable information, we process the transaction, we collect the funds, we do the delivery of the goods, and we do the customer support that's associated with the order processing to it. To us, it doesn't make that much of a difference of whether somebody is ordering from Japan and is paying in Japanese yen through a convenience store payment, or whether he's located in the U.S. paying by credit card or PayPal and is transacting in U.S. dollars. We do all of the transaction processing, which includes obviously all of the calculation of the taxes that's associated with it. We offer tools that allow our clients to actually improve their conversion rates, increase their revenues, and we engineer marketing programs for them so that they can better increase their bottom line. I think that kind of summarizes it in like a 30 seconds. To us, it doesn't make that much of a difference whether our clients are originating in the B2C or in the B2B segments, whether this is services or software. We're seeing a lot of new areas that are just about to emerge, and where we're receiving a lot of inquiries to allow our services to also work in the adjacent markets. We do around about 1 million transactions on a monthly basis, so it kind of fits the theme of 1 million from 1 million. And we service basically every permissible internet market except for the ones that are on the embargoed country list and where we're not allowed to transact. For us, it's also not important whether somebody is accessing the internet through a website, or whether this is through a mobile app, or whether this is through an internet-connected device. To us, it's all the same. At the end of the day, it's a transaction that we're looking at and that we're looking at executing. To give you some ideas of the companies that... Go ahead, Samantha, sorry.
I was going to ask, you know, in terms of transaction volumes and business models, your business model is a percentage of the total transaction or gross merchandise value that you process, yes?
Exactly, because we feel very, very strongly about the fact that we have to offer some very good service quality, and service quality can very well be measured by how successful you're actually converting a simple browser into somebody that will actually buy the product. And so we should only be participating in the actual transaction that is occurring, so we don't have any upfront setup fees unless it's really something where we're doing a major back office integration into existing CRM or ERP systems that we don't already have as connectors available.
Okay, so from what I remember from our conversation, you are doing about $40 million in net revenue, not gross merchandise volume, but net revenue in the company.
Exactly.
So my next question, and this is goes to the heart of where I want to focus our conversation today, is you have built this business with no outside capital, completely bootstrapped, and you do not want any outside capital even going forward. Tell us about how you've done it. First, let's talk about how you've done it. How have you managed to do this without outside capital?
Mm-hmm. So I think the important thing to know is that we were a group of founders. So altogether it was 7 people that started the company, and we were in the somewhat fortunate situation of a combination of a variety of things. So first of all, we all had already been working in this market prior to us starting Cleverbridge. Secondly, we had some savings available to us that would allow us to actually start up a company by ourselves. And thirdly, what we did is we were able to leverage some government grants that were given to unemployed people that were looking at starting their own business. And what the government actually did was they offered something where you would be paid for 6 months from a government fund, and it would calculate to around about 60% of an average salary that would be paid out over here in Germany, typically by companies. And this was something that we could leverage. So the combination of these these items really allowed us to get things started and allowed us for the first 11 months, because this is how long it took us to actually have the first platform in place, to get started on, working without having to worry about what am I going to eat the next morning.
Yeah. So that actually is a good segue into something that I've thought about for a long time. When I was starting 1M, the market was in a complete financial crisis, right? It was a tailspin market that was at the end of 2009, beginning of 2010 is when I conceived 1M, and it was a huge down market. Everybody was thinking whether this is the end of capitalism or not. And one of the observations I had was about Germany and this whole robust SME sector that Germany has always had, where these were private companies. There was a huge number of private companies that actually never go public, and they're not part of this very volatile market, public market that goes up and down and goes through these bubbles. These are robust companies that have robust customers, and they deliver value to customers, and they're not valued at $1 billion, but they are, solid, sustainable companies. And that culture of really supporting thoroughly the mid-market of entrepreneurship is something that I found incredibly appealing. And I've continued to watch Germany, how that culture remains as a kind of cornerstone of German business philosophy. So I want to know from you, because you are a German, you are operating in Germany, how much of that philosophy, how much of that thinking has influenced you as you have, thought about Cleverbridge, the destiny of Cleverbridge, the different options of financing and so forth?
So I think, I can't hide the fact that I'm German. You're absolutely right. The 6 of the 7 founders actually are Germans, and I think we typically exhibit German entrepreneurship in this group very, very strongly. I think for us, and this is where I have to maybe go a little back in history, when we were still employees of a different company, we were actually working for a company that was funded very, very heavily by outside investors. So there were quite a few venture capitalists and banks involved in this business. And I remember very well at the time when I was working for this company, I was over in Chicago, and my boss called me up and he said to me, "Listen, Christian, we've just been bought by the 800-pound gorilla out of the U.S., and we're going to be joining forces with them." And to me, this was something where I felt, why did this happen? And for me, it took some time to actually process that. But there was one thing that was very obvious, and that was that the venture capitalists had a very strong impact on the decisions that could be made with regards to any type of exit scenario. And I have to admit that I was kind of caught off guard by this process. And at the end of the day, this was also the main trigger for myself and my co-founders at Cleverbridge to really assess the opportunity that we would have in starting the business by ourselves without getting any venture funding into the organization. And when I sat down with my co-founders in order to assess how much money we have in the bank accounts and what we could make available for this opportunity, we were so super excited about the fact that our business plan would actually allow us to do the complete funding from the money that we had available to ourselves. And I think this is definitely something that you would have encountered 10 years ago much more strongly over here in Germany than you would do today. I mean, as you know, also over here in Europe, venture funding has kind of been on the rise, and there have been a lot of companies that are starting just on pure eyeballs and hoping that there's a business model associated at the end of the day that is going to allow them to monetize it. And this has obviously also changed the environment over here quite substantially. But at the same time, for us, that was never a second thought, really. We were always about, hey, we want to be in charge of this company. We don't ever want to have anybody else getting into the driver's seat and telling us, hey, now is the right opportunity to do an exit, whatever it would be, trade sale or an IPO. We felt like that there's a lot of opportunity that we could bring to the market in making e-commerce much better and taking it to the next level. And this is definitely a mentality and a cultural thing, as well as the experiences that we've had with regards to private equity funds and venture capitalists.
So what is happening in the German entrepreneurship culture right now? So are people now starting to chase venture capital? Is that culture of self-finance businesses now shifting very heavily towards venture capital, or is there still a section of the German entrepreneurs who still want to do this the way they, the more stable, more, controlled way?
Well, I think there's quite a few companies still around that are looking at doing it the controlled way, let's call it. I do lead quite a few table rounds and discussions and speeches at various conferences, and I get to engage with quite a few startups out there. And you have those entrepreneurs that are looking more at, hey, I want to be in the driver's seat, I want to own the destiny of the company, and there's the other ones that have obviously realized, that there's a lot of money out there in the markets. There's a lot of willingness by venture capitalists to actually put a lot of money into opportunities that are out there. So I think there's somewhat a balance there. And at the same time, I think it's always an easier path to start a business with a lot of money in your wallet and being able to spend yourself out of situations where you got yourself into where you need additional money that you otherwise wouldn't have available. So I think it's keeping the balance, but the market is offering so much more access to it now than that was the case, years ago when we started the company. I mean, there were some venture funds out there, but just have a look at what's happening in the Berlin market space over here in Germany, with the successful Rocket Internet and all of the different spin-offs that they have at that organization.
So your thought with Cleverbridge is to never exit the company. You want to keep running the company. You want to keep building the company. You're doing well. You've got a nice revenue base, and you want to build off that and build into a much larger company. Talk to us about what are the mechanics of that process? So, in a traditional venture-funded company, entrepreneurs recruit employees with the incentive of stock options, and then all these options and everything kind of come to fruition when a company exits, and investors also cash out liquidate when a company exits. Your structure is different. You're thinking about taking this, all the way, and there is going to be there's going to be no exit, so to speak. So how do you, your co-founders who are investors in the company, how do you attain liquidity? Do you want to attain liquidity? Is that an issue? How do you do that? And how do your employees get compensated in the structure, incentivized in the structure?
Okay. So what we've done right off the bat, and this was important to us, we've always focused on making sure that we have profitable business relationships. We would never enter into any kind of business deal that at the end of the day would cause us to go belly up or actually go into the negative, so we wouldn't buy market share. And this is something that we're obviously seeing a lot of times exactly with those venture-funded companies that are going in and offering you know, a lot of free ways of actually transacting their e-commerce business. And that's obviously also something, you know, that we're faced with and challenged with. But at the same time, for us, we said, if we want to make sure that our clients are going to be successful, it also means that we have to be successful. And when we launched Cleverbridge, in 2005, and we started the transaction processing, obviously we weren't profitable right off the bat. From November 2005 until January 2007, so roughly 13 months, it took us to actually get to the profitability level. In January 2007 was the first time that we had more than just a black zero in the balance sheets. And from there on, we were really able to fund all of our expansions just from the cash flow that we've generated. And this is obviously a very strong position to be in, and it's a position that you never want to leave. And it has given us the opportunity to scale the business from originally 7 employees up to 300 that we have spread out across the globe in 4 different office locations on 4 different continents. For us, it has always been that we offer an environment for our employees where they would feel comfortable in actually staying and working, and they find an environment that allows them to excel and work on those things that they find valuable for the market that we are actually servicing. Now, at the same time, obviously, we are also faced with competition where there's companies that are offering stock options, that are offering compensations which are potentially at a higher level than what we could be offering, especially when we're looking at the bigger players in the market. We've also lost employees to kind of those very successful U.S. companies that had the opportunity to go and take an exit and through an IPO. But this has really been a rare loss for us, and I'm really happy about this because it proves that we also must be doing something right here. At the end of the day, Sramana, the thing that I am not trying to say is that for us, something like an IPO would never be something that we would strive for. But it's not something that we would strive for just in order to have a cash event to it. For us, an IPO would just be a means to something, meaning that if we were truly in the need of saying, hey, we need to take this company into a different vertical, or we need to take it into a regional market that we can't otherwise penetrate from the outside, and we have to establish entities in those markets, then we would be willing to make such a step. But it would have to be something that actually serves the purpose of growing the company. That's how we look at it.
So if I'm reading what you're saying right, you have a culture and a style of employees who are comfortable with your more steady, more stable growth as well as game plan. They're not looking for these big IPO kind of style pops or acquisition style pops, and that's the culture you've built. That's the style of employees that you have attracted into the company. Is that accurate?
Absolutely. I mean, you will always have different types of employees coming into the organization. So you will have employees that are also looking for a big exit or something like that. But at the end of the day, you know, I think stability is also something that people are very happy about, and especially with the generation of employees that are coming to the market at this moment in time. Stability is something that is much more important than jumping ship just because there is the opportunity to cash in. So you will always attract different calibers and different people, but at the end of the day, I think we kept a very good balance with the folks that we actually hired into the organization.
And I think part of this also reflects on how Europe is today. Most of Europe is kind of battered, and Southern Europe is facing incredible unemployment, and youth unemployment is through the roof, absolutely. So there is stability is of a lot more value to the population in Europe today than it would be for people in Silicon Valley who are not experiencing that kind of slowdown and that kind of unemployment. Silicon Valley is in, full employment, and it would be hard to sell that to people in Silicon Valley, a lot harder than it would be to sell the stability value proposition to people in Europe. I think that there is a cultural factor to it for sure.
Mm-hmm.
So, Christian, you have a question from the audience. Harkanwal Singh is asking, Christian, how did you acquire your first customer, and how long did it take you?
So the first customer that we acquired was, first of all, I probably have to go back and tell you that we obviously originated from kind of the same business that we're doing today. So when I started the company with my co-founders, I had everything built up from sales down into the engineering and customer service department. So the client that we actually approached, the first one, was a client that we knew from our past employer, and we approached them, and we knew that they were sending a lot of mailings to their end consumers, and we said, listen, is there an opportunity for us to get one of those mailings and prove to you that we've got a really successful solution that is going to be capable to increasing your bottom line? And the company by the name of Shampoo, they actually said, you know what, absolutely, I'll give it a shot, because I think that the consolidation that happened in the market was not really a healthy one. So I would like to see whether you can do this. And so this was in November of 2005. He actually sent out a mailing, and we were able to process, I think, 5,000 orders in the month of November. And it only took after that, after we've proven in that mailing that we have the capabilities, we did a couple of A/B tests with his existing solution that he was currently running on. And he was really impressed by the fact that we were able to convert at a much, much higher rate than his existing solution. I think we were outperforming roughly 10 to 15% at the time, and that obviously has a huge impact on the bottom line. And it was only a question of a very short period of time for the CEO of Shampoo to actually say, you know what, guys, I'm going to run all of my business through you. So it only took him 3 months to actually make that decision, because it obviously took us also a little bit of time to kind of build all of the missing bells and whistles that we needed to build in order to be successful for him.
Terrific. Christian, I think we should go to the mentoring section of the program so that people can ask you questions through that as well. Sure. I know you're staying for a little bit. We'll start actually also in Europe. Ivan Caballero in Barcelona. Ivan, if you could please, is it Ivan or Ivan? How do you go by?
Hi, Samana. It's up to you. Ivan in Spanish, Ivan in English, so no problem.
Ivan, that's what I thought. All right. Tell us what you're working on, Ivan.
Okay. Can you go to the first slide, please?
Yes.
Okay, so I'm working in the social coin. We funded this project 2 years ago, and it started like a social movement in the streets of Barcelona, just promoting acts of kindness, trying to prove that kindness can change the society. So after some months doing that, we noticed that we had a business model, because we started to have traction. We started to have calls from companies. So can you go to the next slide, please? we noticed that there is a huge problem in the world related to unhappiness and unengagement of the employees, and it's costing more than $500 billion to worldwide big corporations. Next slide, please. And we noticed that thanks to small acts of kindness, we could engage employees in order to impact in the local communities. And this is impacting directly into different business areas like innovation, productivity, and less burnout of the people. So can you go to the next one, please? So we came up with a solution. We created a platform, a software as a service platform oriented into big corporations, cities, and education, combining mobile and web that helps engaging employees and having metrics for the very first time in real time about the social responsibility of all these communities and how are they impacting in their local communities. Can you go to the next one, please? We noticed that corporate social responsibility in the United States is a market of more than 20 billion, and there is an addressable market of more than 1 billion for a solution like ours. Can you go to the next one? Yeah, so we came up with a mobile platform. It's a very simple platform that allows to introduce all the good deeds that a community is doing under a private channel, and they can inspire others in order to join the ripples, their kindness ripples. So different communities like cities in Barcelona or like Cisco, which is one of our main customers, are using this mobile application. Can you go to the next one, please? Yeah, a ripple represents an action that one person wishes to take, and that allows to share it to the community. Can you go to the next one? Yeah, we are creating challenges. So every single community can have different challenges on this mobile application. So let's say, for example, that Cisco wants to coach in IT to the local communities through the talents of their employees. So they launch the challenge into the application, and all the employees that want to join it, they click on the challenge and they join it. Can you go to the next one, please? Yeah, as I already told you, there is a company channel, a private company channel, where all the employees are present. And here's one of the biggest thing, which is the Spark. It's a scoring for positive acts of real kindness. This is a reputation scoring that we are using in order to give, to validate all the good deeds that people are doing. We aggregate it also into companies and also into cities. These are some screenshots on the platform that where everything is historified. Can you go to the next one, please? And to the next one, please. Yeah, and everything is tracked into a corporate dashboard. So every decision maker in every organization can see the values transmitted from their employees into the society. They can see also the number of good deeds, the type of good deeds, which employees are happy and are engaged, and which employees are ready to churn the company. And the process of going on board is super easy. It's just signing in and inviting everyone. Okay, we are having some traction. We are working with Cisco, with Telefonica, with Airbnb, some of the Fortune 500 companies. We are working also with the city of Barcelona and UC Berkeley in the United States. Can you go to the next one, please?
So I have a question before you go on, Ivan. What is the business model with these customers? You're selling them the platform, and you're charging them for the platform. How do you charge?
Yeah, it's a monthly fee. So it's an onboarding fee because normally everyone wants to have a slight customization, and then it's a monthly fee depending on the number of employees they have. For example, with Schneider, we are going global right now, 180,000 employees worldwide. So we are charging around 10 cents per month per employee.
Okay.
Okay, these are some of more customers. Can you go to the next one, please? Yeah, two things that we've noticed that the companies are valuing. One is that Cisco increases their employee participation in 100%, which is something really amazing. And Schneider, for the very first time, are having corporate social responsibility metrics. And they are mixing all these metrics with all the well-being programs, which is something really, really innovative. Can you go to the next one? Yeah, some alliances. We were selected by Startup Bootcamp 6 months ago, like one of the best European companies in big data and IoT. By the Institute for the Future as one of the trends of the decade, the paid-forward economy. Yeah, can you go to the next one? Yeah, some use cases. I think I'm running out of time, so yeah. Some milestones. I think it's very important that I give you some vision of where are we going. Our next step is integrating blockchain technology in order to be able to settle an alternative currency around all this activity. So just to give some track record to everyone that are doing good deeds and to put all this technology into the reputation system. In order to become a civic reputation standard in the future, probably in 2 years. Can you go to the next one, please? Yeah, we are looking right now for our seed round of between $500K and $1 million in order to be invested in a sales office in the United States, because we really believe that our main market is there. And yeah, we closed the first year with 250,000 euros in revenues. We plan to close this year with 500,000 euros in revenues, which is around $800K. Half already committed, and with great projects like Schneider going global, or with BBVA, which is the 7th biggest bank in the world. So yeah, can you go to the next one, please? Yeah, and why investing in us? Of course, please.
So how many employees do you currently have?
We are 5.
5, okay.
Very good. Good execution, Ivan. Good to see that you're, in revenue, your business model is validated, you're getting, major enterprise customers. All this is going to help you tremendously in raising money.
Yeah. Yeah, in fact, we are in conversations with some venture capitals in the United States, but I really believe that our business model is super exotic. It's mixing some different things, like some different aspects, like the social thing, like the CSR, which is there's not a lot of people that has knowledge on that, and all these values-driven projects. So we are struggling a little bit on finding the fund or the proper people to talk to.
And what is your question today?
Well, my question is, I would like to have your feedback on my presentation and in general, and I would like to know about how do you think we should we should be funded. I think Christian can have a very, very valuable feedback on that. And Ramana, of course, you with your knowledge on the Bay Area, I think it would be super, super interesting to hear.
Christian, why don't you take the question first, and I'll add my thoughts after you're done.
Well, I think what's really good is that you've got a track record of having been able to execute by yourself up to the level that you've gotten to. I would always give you the advice, try to extend this expenditure that you're trying to achieve by getting additional investors into the boat for as long as only possible. Because you're going to be pushed into a direction where you have to, first of all, understand whether you want to be pushed into that direction. You've got so many marquee clients already in there, where you can really build upon. And mind you, that reputation that you've built there is something that you could truly leverage moving forward. And I'm wondering whether you truly need the money at this moment in time, because you're obviously generating revenue already. You've got the monetization strategy in place, and it's a question about tweaking it into the right direction. And the question that you also have to ask yourself is whether the price point of your product is correct, or whether you can actually build it up into a much higher level that would allow you to actually avoid taking on money. Because this is always what I would obviously try and recommend to any entrepreneur, and try and hold on to your shares as long as possible.
Yeah, that's a great,
Yeah,
that's a great advice.
I have to say that that's kind of my my take on this as well. Because you're doing so well, there's no need to rush into an investment situation. Now, I will give you some perspective on if you try to come to Silicon Valley and raise money, and I'll be happy to help you if that's what you choose to do. But where I would point you there is if you can get to what we call a $1 million annual recurring revenue run rate. You don't have to show $1 million in revenue, but if you can get to a revenue run rate, monthly revenue run rate of about $80,000 a month, that essentially gets you to this 1 million ARR, annual recurring revenue run rate. That threshold makes raising money in the Bay Area a lot easier, especially for companies that are not from the Bay Area. And we work with investors who would invest in that stage. And then the other thing is you have to pay attention to the growth rate. So what investors are looking to invest in are fast growth companies. So if you can get yourself to the ARR threshold and show 100% year-over-year growth, this project is eminently fundable, and I'll be happy to get you financed. But I also echo Christian's perspective that you're doing so well. Why do you need to rush into financing? This is a question, by the way, I would like all of you in the room to contemplate. Why are you raising money, and why are you rushing to raise money right out of the gate? It is not the best way to build a business. Okay? Yeah. Ivan, yeah, congratulations. Amazing. Very, very good execution. Very impressive. Delighted to see this.
Thanks.
Absolutely.
Thanks a lot.
You're welcome. All right, we're going to Sudip Datta in Chile. Relatus is the company. Sudip, please unmute your line and tell us what you're doing.
Hi, Sudip here. Can you hear me?
Yes, we can hear you.
Great. Good morning, good afternoon, good evening, and buenas tardes to Ivan. So I'm Sudip. I'm the founder and CEO of Relatus. And Samana, can you move on to the next slide? I'll explain to you what we are doing. Okay. So Relatus, in short, actually helps salespeople maintain better relationships with their contacts using predictive analytics and data science. And about myself, Samana, if you could move on to the next slide, please. So I have about 15 years of sales experience across 3 different continents, and I helped build the CRM system for multi-billion.
Whoops. Hello? Did Sudip drop off? Yeah, looks like we lost him. Okay, well, we'll come back to Sudip. Why don't we go to the next present. Sudip, are you back?
It looks like he's still on the call. He might have hit mute. It looks like he hit the mute on his phone, so maybe if I type that in. 1 sec.
All right. Or we could go to the next presenter and come back to Sudip. How's that? Howard, why don't we go to you next in Vancouver, Canada. Howard, please unmute your line and tell us what you're working on.
If you go to the next slide, my partners and I have developed a creative trust game for virtual teams called Prelude. If you go to the next slide. The primary reason for Prelude is to respond to a major global problem with virtual teams. There's over 1.3 billion people working remotely right now, and there is a ton of research that shows there's a profound systemic lack of trust. There's an expectation that people working on virtual teams should be able to work exactly the same way that co-located teams work, just jump into the project and get going. And in fact, what occurring is that 80% of virtual teams are working well below capacity, and 65% have no virtual team training. And working on a virtual team, we liken to working in zero-based gravity. In other words, you need a different psychology and a different physiology, if you will, to be effective working virtually, especially if there's not going to be any opportunity to meet the other person on the other side of the world. The result is there's a tremendous amount of lost productivity, high cost overruns, and a whole variety of consequences, including missed innovation opportunities and poor morale. You go to the next slide. We've developed a solution which is a serious game online that's facilitated, that is, as you see here, structured in a modular form so that in incremental bits over a week or two before a major project would start, with an investment of less than, let's say, 5 hours for a team of 10, with no more than 45 minutes or an hour in each module, the team itself is provided an opportunity to get to know each other. We've integrated 20 best practices that virtual teams are using around the world in this one solution. And if we go to the next slide, what we're finding is that because virtual teaming transects a variety of overlapping verticals, we're getting tremendous response from agile software team developers, project managers, HR consulting, certainly collaboration services, and online training and education. So the product is really geared to practitioner users, trainers, facilitators, coaches, HR managers, and educators. If you go to the next slide, we developed the product and tested it throughout 2014. Based on the inputs we got, we launched a working version of the product this past February. We're still pre-revenue, but we already have signed on 14 resellers in 7 countries to date. In fact, that's now 10 countries and 20 resellers. So we're getting very good response across the board from the type of markets we described earlier. If you go to the next slide, the benefits become very obvious to anybody working within the virtual team environment. The most important thing, I noticed one of the previous speakers was talking about well-being and kindness. Social and emotional intelligence is a prime factor for all effective teaming, but especially for virtual teaming. Our product helps to improve communication. It helps teams to better appreciate their diverse assets and how they can actually channel those assets in a purposeful way. We're consciously helping that team to develop a positive team mental model of itself, which leads to effective collaboration and increased well-being. I should also say that the product is designed to be played on any type of platform and is agnostic in terms of what kind of communication devices might support it. In terms of customer acquisition, we've got a small dedicated sales force. We're certainly using social media, referrals, and evangelists, and we've really done a lot of research around trying to find a sweet spot for the packaging and pricing of the product, and the results are obviously, even though it's early days, are speaking for itself. Next slide, please. In terms of financing, we've been doing this on a bootstrap basis, my partners and I. We do have some initial early, we're calling them early angels, but really the other term could be love money. And so between 2010, when we started actually conceiving the idea, to 2015, we've probably raised about $500,000 in cash and sweat equity. Right now, in this current phase, we're taking a very hard look at where we can go and how we can grow the enterprise so that it can be profitable and sustainable. If you go to the next slide, we have a very core team of dedicated professionals. We're a virtual team ourselves, so we're located in British Columbia, Arizona, Kansas, and Toronto. One of our advisors is Mars, which is an incubator in Toronto. We've got Jay Feist, who has been helping to back our development aspect, and George, who's based in Ottawa, who's great in terms of figuring out some of the legal implications of working in a variety of countries. So that's it in a nutshell.
So what, Howard, is the situation with customers? Do you have customers? Do you have paying customers?
We have, we're twice removed from the end user client. Our strategy is to find resellers, in other words, consulting firms that are already involved in those verticals that we mentioned who are looking for innovative products. So we're kind of a manufacturer looking for wholesalers who in turn will sell to the retailer or the end user client. So
but do you have any such partner? Do you have any such reseller in place?
Yes, we've signed about 20 now in 10 countries since February.
And are these resellers generating revenues yet?
Just starting.
Okay. Okay. So what is your question for today?
Oh, I think just the opportunity to speak with you and the network you're involved with, just to get some general feedback or impressions of what we're doing. Any thoughts at all would be appreciated.
Well, you know, as you heard in the discussion prior with Christian and also as we were talking with Ivan, both Christian and I actually, I think, value system-wise are very customer-focused. So the first order of business is to get customers, get validation on your business model, get validation on your pricing model, and get to revenue. So if these 20 resellers are supposed to get you to that, that is the first order of business, is to start revenue flowing in the company.
Right. We're very conscious of that.
And if you can do that, everything else will flow from that. All other strategic moves are going to flow from that. So first, right now, I would say for the next 6 months, 9 months, even maybe 18 months, that's what you do to get to a revenue threshold. Again, you know, as we talked about, there's certain revenue thresholds that are needed for anything else to happen,
sure,
including sustainability, profitability, and all of those good stuff. I would kind of say that's pretty much your first order of business right now.
Thank you.
Okay, we'll go back to Sudip. Are you on the call, Sudip?
I'm sorry.
Sudip, are you there?
Yes, can you hear me?
Yes, we can hear you. Go ahead. Let's go back to your presentation.
Great. So I don't know where I lost you guys. As I was telling, Relatas is made for salespeople to help them build better relationships with their contacts using predictive analytics and data science. And if you could move on to the next slide. So I've been in about 15 years of sales experience across 3 different continents, and I helped build the CRM system for a multi-billion-dollar company called Infosys. I travel a lot and I meet a lot of people, and the problems that I faced while selling was that when I have to meet you, like let's say for example, if I have to meet you, Samama, so it's very difficult for me to understand who you are as a person, right? I will go to your LinkedIn profile, Twitter, and Facebook and try to analyze and create virtual profiles of you. So what we have built within Relatas is actually it analyzes all your social feeds and creates a virtual profile about you. So I'll get into the product in the next slide. So what we have built is a system which actually brings in all your interactions onto a single platform. Now, you would be interacting with your customers either through Gmail or Outlook or any other mail format, through LinkedIn, through SMSs or Google Drive, sharing documents, Twitter, phone calls, or Facebook, and across different platforms, right, your phone, tablets, or computers. But what happens is that all the intelligence of those systems reside on those systems, and you're not, in some cases you might be, but in most cases you're not able to create the actual virtual profile of that particular person. So Relatas captures all this data from your daily activities without you inputting any information on any of the other systems. Can we move on to the next slide, please? So as I was saying, most people don't remember who they met, where they met, and what was the last interaction, and when they're losing touch with a particular prospect or a customer. Next slide, please. So now imagine that you're getting a phone call from me, and while the phone rings, it actually throws you information about what were your past interactions and what are your upcoming interactions, who are the common connections. So Relatas effectively informs you of all your interactions and tells you when you're losing touch with the existing person. Next slide, please. And what we have built is a global interaction map. So you don't have to input any data here. It actually captures from all your interactions. So you click on any location. Now, just for example, I'll be in the Bay Area in another 2 weeks. And all I did was I just went to Relatives, checked on who are the people that I've interacted with in the Bay Area, and I sent them a mail that, yes, I would be coming there, would you be interested in meeting with them? So you click on any location. You can drill down into cities and even villages, and it shows you who are the people that you interacted with in that location and how many times you have interacted with them. And if you click on the number, it actually shows you what were your past interactions with those people. Can you move on to the next slide, please? So these are the interaction details that Relatives captures from different platforms, gives you the relationship strength of who you're interacting with, and tells you when anybody is falling off radar or you're losing touch with anyone. Next slide, please. So we did a beta launch in March of 2015, and over the last few months, we have about 1,200 users. We are growing over 30% month on month. We have close to about little over 750,000 contacts. We have users from about 180 countries, and these users are from about 450 plus organizations. And we were the runners-up at Google Launchpad, conducted the first Google Launchpad that happened in India. And we are part of Startup Chile, and that is the reason that I'm in Santiago, Chile right now. And we got a grant of $40,000 equity free from Startup Chile, and have also won a few awards on the way. Next slide, please. Yes, Amaya, do you have a question?
Yes, I was going to ask you what are you learning about the business model?
What am I learning about the business model from the existing users?
Yes. What are they willing to pay for? How are they willing to pay for?
Sorry. Sorry. So we haven't gone into the payment mode yet. And we did a little pivot after we came to Startup Chile. We spoke to a lot of, because Startup Chile actually gives you a good platform where we can actually speak to 300 different other entrepreneurs. And as we were speaking to them, we understand that we could actually add more value to our existing customers. And that's where we did a little pivot, which we're launching in mid of August, along with our mobile app. And that's when we start generating revenue and ask customers to pay us for that. So we are not into the revenue cycle yet. We are pre-revenue right now.
So what is your assumption about how you're going to generate revenues?
So it's going to be a freemium model. So Relatives is a B2B2C kind of a model, wherein individual users would sign in on their own, but the major revenue would actually come in from enterprises, because Relatives has a team structure wherein, let's say, for example, a VP sales could in real time track who their sales team is meeting, who their sales team is losing touch with, how are they actually managing their opportunity pipeline and everything. So currently, most of the salespeople, coming from my experience, actually have to, if you look at most of the CRM systems right now, most of the people have to actually enter data into the CRM systems, whereas what Relatives is trying to do is capture all your interactions from all the different entities that you interact with your customer with, and puts it directly onto Relatives and gives you a real-time feed about how you're managing your relationships.
So my feedback to you would be, you are saying that you have 450 companies that are on your system, users from 450 companies are on your system. Wherever you have, heavy-duty users that you can go actually use their experience and talk to them and get leverage there, and go talk to the VP of sales of those organizations and go actually sell and turn this into a revenue-generating business, you would do a lot better, because in general, freemium business models take a long time to monetize unless you do something to speed that up, and it's very capital intensive. And that kind of capital intensive businesses have a level of risk that you have to pull together that level of capital to be able to sustain a freemium business without monetization for a long time. And I recommend that you do not take that kind of capital risk. That's my impression. Christian, what do you say?
Right.
When I take a look at the numbers, combining users and companies, so you've got approximately 3 users per company, right? Why are there not more, or are those all smaller companies? Have you done any analytics to that?
Right. So, Christian, in the existing platform, what we have in Relatas right now, so it's only the individuals who can sign up. But when they sign up, they give us their company information, where they are from. So what we have, so it's not open for enterprises as of yet. So the next launch that we do mid of August, that's when we open up for enterprises. So this analysis that you see from 450 companies, these are these individuals logging up on their individual capacity from that particular company. So we haven't reached out to any companies as of yet.
The question Christian is asking is a very important question. Are these people from small companies? Are they people from large companies? Do you have large enterprises in there?
Okay.
Can you get to large enterprise management or executive management to sell your system enterprise-wide?
Right. Right. So, sorry, Christian, so I misunderstood your question. So, yes, so we have people joining us from companies like Microsoft, from Amazon, from Persistent Systems, and other companies. So, it's from the large enterprises to small and medium enterprises to startups as well. And close to about 35% of the 1,200 users that you see there are top management in the organizations. So my trip to the US in the next 2 weeks is actually to meet up with these people and try to understand how they are using it and the benefits they're getting, and if we can actually get the whole organizations to start using Relatas for that.
I think the challenge and I agree with Sharmana is to find a monetization strategy for this, because taking it down the freemium path is going to be challenging. I mean, you've got some nice growth rates, but at the end of the day, you really need to get this at a much quicker pace in order to be attractive for additional investments. That's at least how I see it, because otherwise you're going to have to give in a lot of shares from your company in order to get the amount of funding that you probably need in order to scale the business.
Yeah. You should, all of you, keep this metrics in mind. If you're trying to build these recurring revenue businesses, software as a service kinds of businesses, you're going to need to get to $1 million annual recurring revenue, showing 100% year-over-year growth as quickly as possible. And you better figure out how you're going to get to those numbers with real business models, real pricing models. All this, we're going to do freemium, and we'll figure out the monetization model somewhere along the way. This kind of approach is not the right way to build businesses. That's, that's our feedback to this.
Yeah, so I had some questions on the pricing model, right? So when I said that it's a freemium model, so freemium model is only for the individuals who sign up. So look at Relatas like LinkedIn, wherein users log in freely and create the network. And one of the features that we actually have, because of which we have the freemium model, is because now, let's say, for example, if you want to if I want to get in touch with Mark Zuckerberg and he's not connected with me on LinkedIn or any other platform, but let's say, for example, you are connected with him and I'm connected with you. So Relatas can effectively tell me, based on my interactions with you and your interactions with him, that you are the best person to connect with him. And for that, we need to build a network effort, and that's where we have the freemium model for individual users. But the main revenue that we expect to come in is actually from the enterprises and not for individuals.
So you start, I guess the point that Christian and I are making is that you focus on getting this to a business. The freemium and all is fine, but you need to get to what is the enterprise business model, how are the enterprises going to buy this product, what is the sales cycle, how much are they going to pay, what is the pricing model, etc. So your instincts are right, and you've worked with Infosys, so you know enterprise selling and all of this. So you should leverage that background, your experience of enterprise sales, and get this to an enterprise selling strategy as soon as possible. Okay, otherwise, what will happen is you're going to get into this Series A gap situation. And there are numerous companies. I've written about this. Maybe some of you have read this. In 2013, I believe, there were 70,000 seed financings, angel financings. And then, the venture capital financing is relatively constant year over year. It's 1,000 to 1,200 venture capital financings. And this gap between seed and venture capital is immense. And huge numbers of companies fall off in that gap. So if you're banking on trying to raise money and being able to bridge that Series A gap with additional capital, without fundamentals, it's going to be very difficult to do, and you're taking a level of capital risk that I don't personally feel comfortable with.
Mm-hmm. Okay.
Okay.
Fair enough. One last question that I have is, what would you suggest on the pricing strategy for a SaaS platform like this for enterprises?
What I would first and foremost ask you to do is all these, large enterprise, you said you have a lot of top management people from large enterprises in your system. You don't need to visit them. Just talk to a bunch of them. Talk to 50 of these people on the phone and ask them how they plan to use this and how valuable is this to them. How much are they willing to pay? You're going to need to understand how much are they willing to pay. I mean, the framework is probably, X dollars per month in recurring revenue per user. And you're going to give them volume discounts and so on and so forth. That's how you're going to structure an enterprise deal. But what is the value of that X dollars? Because don't forget, LinkedIn Premium is a very reasonably priced product. It's a $50, $49 or dollar something kind of product. So that sets the bar fairly low. So your number is much lower than that. Your number is probably 1/10 of that. You see what I'm saying?
Fair enough. Sure. Christian,
okay.
any parting comments?
Pardon?
I was wondering if Christian has any parting comments.
Well, I tend to agree with Shramana here again. I think what's really important is trying to find the value proposition for your product, and not out of your perspective, but out of the perspective of your user base or the ones that you're trying to reach. And I think you have to do quite a bit of market research in order to understand what is the value proposition from the outsider's perspective, as well as what they are willing to pay, because at the end of the day, there could be a huge distance even between those two, and then you have to identify whether this is how you're going to support the business model, if it's high enough, or what happens if it's too low. How are you going to go about it?
Okay.
Great. So we're going to move to the next presenter. We have one more presenter to tackle, but if there's time after the presentations, we can do more Q&A, okay? So just hang on. We'll talk more afterwards. Meanwhile, we need to have Hisham unmute your line and tell us what you are working on from Toronto, Canada.
Hi. Yeah, this is me, and I thought maybe I should add a small funny thing about myself. So now we can move maybe to the next slide. So what I found is there's no sufficient communication tool to discuss designers with multiple parties like clients, consultants, or other stakeholders. What does that mean is now you're a designer and you finished working on this design, you send it to a client, a coworker, a consultant, and then there might be some details on your design that the receiver that they can understand on your drawing. So what happens is you may have a phone call or try to explain this on an email or maybe a video conference. What Arch is doing is creating this online platform where you can share the drawing and start putting markups and notes on the drawing to show the other party that is joining this session with you on Arch what are these details about, and you start explaining them and highlighting them so they can understand which part of the drawing you're talking about and how we can do edits, how we can do changes, and etc. We can move to the next slide. So the value proposition, I actually came to find that there are few competitors out there in the market, but they are working on a different scale. Now, those 5 competitors, they are creating a platform where you can be working on a team project, a big construction project, for example. The platform would allow for you to run the project from A to Z, upload all your drawings and schedule meetings, and again, run the project from A to Z. But this is not what Arch is about. Arch is about creating a session for me as an architect or engineer or an interior designer. Individually, I can ask you, Shamana, as a client, or maybe my consultant, or a coworker in the field, to join the session so we can discuss the drawing together by marking up, putting notes, chatting on a session by Arch. Now, next slide, please. The market entry, and this is not my main concern right now. I was able to validate my assumption and the problem. The pain point exists. By talking to 40+ architects and engineers, I came to find that they don't like discussing their drawings on phone calls. It takes a lot of time and a lot of pain to explain to the other side what is a lot of details on your drawing, and same for emails and video conferences. My question would be, for the financing, it should be a free service. How would I generate revenue? I can create premium accounts, and I can have ads on my platform once there's good traffic on my platform. These are some examples of the premium services that I can offer for the premium accounts. Next. For my market competition, these are all the competitors I found out there in the market. And maybe you need to ask why I categorize them as leaders. The thing is, they are leaders not because of their market size or the number of users they have. I came to find that they are leaders because of how big their product is. And that's why I categorized Arch as a nicher. Again, I don't know how many users they have, but the 40+ people that I interviewed, they have, again, they are architects, engineers. They have different number of work experience, from 5 to 15 years of work experience. And I've been talking to people from all over the world. I mean, not only from North America, people from Europe, people from India, people from Africa, and they all acknowledged the same thing. For them to discuss a drawing or a design, they need to go on a video conference, a phone call, or by email, which is not.
None of these competitors offer what you are talking about. It seems like a lot of competitors in the space, and I know this space quite a bit actually from my previous work, especially when I was consulting, and there have been attempts to crack this space for a while, so I haven't really kept up with the space, but I'm just surprised that you're saying that none of these many competitors offer what you are planning to offer. You're not even offering it yet, you're planning to offer this.
Yes. The thing is, some of them, again, these are platforms for team projects. So you need to have a team, and you need to run a big project of scale. Now, that's when it makes sense for you to pay for them. The second thing is about payment. You need to have a license for some of those people, or you need to download a software, which is for some of the people that I talk to, they can't ask their client to download a software to their computer or pay money for any kind of service to have this conversation. They need to find a tool that they can log into, and they can start the conversation right away and discuss the drawing.
So there are two issues here. It sounds like your main differentiator that you want to launch with, and what your prospects are telling you, is that they want a free tool. And that, to me, is a very dangerous kind of customer. If you're going after a segment where people don't want to pay, you cannot build a business on that. Yes. I hate that kind of segment. From the point of building a business, that is the worst kind of customer base that you can build a business upon. Mm-hmm. So free is not the way you should differentiate. Your of your differentiation strategies, you should chuck free out of the window right now and see if there's an opportunity to build a business based on a product that people are willing to pay for. If not, then you don't have a business here.
Good. Now, my question would be, and this is what I'm currently like struggling with, how to validate the solution. Now, being able to talk to people, and maybe I need to work a little bit on the differentiation and find another way to differentiate my product from the other competitors.
Absolutely.
Absolutely.
You have to really immerse yourself and understand what all these other products offer, and immerse yourself in customers who are using those products or are unhappy with those products, and figure out what is the gap in the market. That's how we come up with new business opportunities. Without that exercise being a really thorough exercise, you will achieve nothing with this project. Free is not the differentiation strategy you should go after.
Yes. Now, once I find this differentiation tool, what would be next to validate the solution?
Well, you know, we have, why don't you hang on for a second? We will explain to you, if you decide to work with the 1M1M program, we will teach you every little detail of validation. So you're going to, you know, if you join the program, you will have access to the curriculum. We have full validation strategy in the curriculum. There are multiple lecture modules, etc. You will learn all that. You will execute on all that. As you're learning from the market, you will come back and talk to me in the private roundtables. I will coach you. I will work with you on that, and you will have your validation piece, you know, in full swing through that process. We will teach you everything.
Good.
Okay. All right. So, folks, we are, you know, our humble request to you, if you like what we're doing here at 1M1M, is please refer the program to serious entrepreneurs. And see, the word serious is in bold, right? Why? Because entrepreneurship is not an overnight, you know, get to be very rich scheme. It's working every day, every week, every month, every year, block by block, brick by brick, building something. And that's the kind of entrepreneur we're looking for, who is interested in doing that, is interested in that kind of heavy lifting to build a business that has lasting impact. So in terms, I'll just run you through what you can expect, how to use the program, etc. And I know many of you have, you know, lots of issues that you're wrestling with. We are pretty good at helping you address the issues that you're wrestling with. I'll just explain to you how to use the program if you choose to use this program. We do not think this program is for everybody. It's a very rigorous program, as you will see as I explain it to you. So everything, by the way, is virtual. It's 1mby1m.com. So if you're comfortable with online learning only, then should you join this program. If you're not comfortable with online learning, this program is not for you. You will find a fabulous and very, very content-rich blog that you will learn a lot from on our website, and this blog is completely free. So at the minimum, you should start, you know, immersing yourself in that resource and learn from that. If you're not willing to spend money on further learning, at least learn from the free offering. The Entrepreneur Journeys book series is a very reasonably priced book series. All of it, 12 volumes of Entrepreneur Journeys, are available on Amazon and Amazon Kindle, and each of them double-clicks down into a specific topic. And you can learn all kinds of things, you know, bootstrapping with a paycheck. It's a very popular topic. A lot of people today are trying to bootstrap a company while holding on to their full-time job. So we recognize that trend in our long, you know, involvement with the entrepreneurship ecosystem, and we decided that this warrants a book to really fully understand the phenomenon. So if that's something that you're contemplating or that's something you're doing, go check out that book, and you will get a very comprehensive perspective on that topic. We also have industry-specific topics: e-commerce to Web 3.0, Carnival in the cloud, people who are interested in building billion-dollar unicorn companies. We have a book on that topic. So if you go to the website, there's a ton of material. So, you know, many of you today already, we've heard from several of you who are, you know, looking for funding or contemplating funding. You do need to understand what does it take to be funded. So, you know, audience, how many of you are contemplating funding? You heard a very, very different perspective from Christian today and about funding and what he thinks about, you know, your options and when to raise funding and so forth. I tend to agree with a lot of what he said is to delay funding until you are robust, and that's what we see in the market as well. Some of what I described earlier in the session today about what are investors looking for, what is the investor's perspective in terms of what they want in funding. So all of this we teach you at a very comprehensive level within the premium program. By the way, these roundtables happen every week. These free roundtables, you can, you know, leverage these roundtables as well. And to do that, you need to register to attend or to pitch in the free roundtable page. Then we have the premium membership. You know, 1M premium membership has extensive methodology guidance on all aspects that you need to learn to build a business. So we have a very powerful curriculum through which we teach you various topics. So I just, you know, talked to Hisham about how he's going to do validation. Well, we have a curriculum module where you can go in and learn all the methodology, and then you're going to go implement that methodology as you are learning, as you're getting feedback, as you are running into roadblocks. You'll come back to the program and I will help you through that process. I will work with you through that process. You learn the methodology through the curriculum, and then in the private roundtables, we actually work with your project and help you make progress. So that is a general principle of how we work. You know, when it comes to financing, Ivan is, you know, contemplating raising money in the Bay Area. We're very happy to work with you on that. You're going to need to understand what collaterals you need, what pieces you need to put together, what are the expectations. So we have a very comprehensive multi-module, multi-sub-module financing topic in the curriculum. So Ivan, if you choose to work with 1 million by 1 million, we would want you to go digest that whole curriculum bit, really fully understand what you need to put together to go out to raise money, and then we will, you know, take you out to raise money based on all that material. So, you know, we make use, the reason our program is scalable is because we use that combination of curriculum modules and actual interactive mentoring. Like we're doing here today, we have more comprehensive sessions behind the, you know, closed doors, so to speak. So we have private sessions where we do a lot more of that. And that's how you get the hands-on coaching and the interactive coaching. So that's also kind of, you know, you could call it coaching, you could call it mentoring, you could call it consulting, whatever it is, but that is the interactive working together bit where I will get to work with you shoulder to shoulder in helping you move your business forward. And yes, we will help you with financing for sure. So now, of course, you know, today you listen to Christian. You don't have to raise money. We do not push you. Unlike other incubators and accelerators, we do not push you to raise money. That is not our intent. You don't have to raise money. It is not a requirement. So if you go to the $1 Million Club link on the website, you will find case studies of companies, both who have raised money and those who have not raised money, but who are success stories of the 1M program. You will find ROI analysis, you will find orientation material, all this are on the website. So I'm not going to spend a lot of time going over every single detail of the program, but I do recommend that before you decide to join the program, you really spend some time on our website. We've tried to make it as comprehensive as possible, what to expect from the premium program, you know, what the program consists of, lots of video FAQs. Do we help you raise money? How do we help you raise money? Do we help you with business development? How do we help you with business development, validation, etc.? All these are answered in the FAQ section. You will be able to pick up answers to all your questions there, and definitely spend some time on the website before deciding or whether this program is for you or not. And if you then decide that the program is for you, you will, achieve something very, very interesting in being able to tap into the knowledge of a huge number of entrepreneurs who have been successful. If you look at how we teach these curriculums, like whether it's validation, or it's financing, or it's customer acquisition, in every single module, we have invited very successful entrepreneurs, over 600 of them, who have helped us build this curriculum. So they have told their stories, their journeys, their case studies, and what you get to do is experience having coffee with these entrepreneurs and getting mentored by them through this video lectures and case study based curriculum. So it's a very powerful experience, very inspiring experience to have access to all this in a very compressed, very efficient format. It's kind of an entrepreneurship MBA, but with 600 speakers and case studies that are really, really successful, powerful people who are bringing you their perspectives. Just like you had a chance today to spend some time with Chris Chan and get his perspective on certain important topics. We have tried to simulate that experience across the board. Our methodology is lean, capital efficient, bootstrap startups. We will try to get you as far as possible in that mode before you raise financing, and if you choose never to raise financing, that's perfectly fine with us. Okay, so, and also we help you with media relations. We have tremendous clout in the media, and we get you your message out there through using that clout whenever you're ready. So that's pretty much it. If you're in some part of the world trying to build an entrepreneurship ecosystem and you want to partner with us, we'll be very happy to do so. Upcoming free roundtables, we have 3 more this summer. So there's plenty of time, plenty of opportunities for you to, come and work with me here. And, for those of you who are working in the emerging markets and looking for ideas still, something to work on, Vision India 2020 is an ideation book that I published where I've published 45 billion-dollar business ideas, and I've fleshed them out as if they are sitting in 2020 looking back on building these businesses. You're welcome to take any of these ideas and build upon them. Incubator in a Box is our program that we use with corporations and other kinds of organizations like governments, like investors, to build incubation programs for them. Some of the recent recent Entrepreneur Journeys books are Billion-Dollar Unicorns, Carnival in the Cloud, Bootstrapping with a Paycheck, E-Commerce to Web 3.0, etc. And we have some more time for Q&A. So now is a very good time if you want to talk more. Any of you, you're very welcome to ask questions either in public chat or on the phone. Either way is fine. And while you're doing that, while you're thinking about your questions, let me also introduce you to Irina Patterson. If you have questions about the program, please contact Irina at 1mby1m.com, and she'll be happy to answer your questions. That's pretty much it. Questions, comments? Anybody? All right. We will then see you soon perhaps at our next roundtable, or if you're in the premium, if you join the premium program, we'll see you in the premium roundtable. And good luck, everybody, with all your projects. We had a very, very interesting session today, and what excites me always when we have this kind of diverse around the globe experience. We had Chris Chan from Germany, we had Ivan from Barcelona, we had Hisham from Toronto, we had Howard from Vancouver. It's really exciting, and then we had Sudip from Chile. So it's really exciting to have all of you from different parts of the world and be able to work with you in this, really powerful working session where we actually get things done. And that's the whole point of it. It's a safe place where we come to work. That's the whole point of it. It's a very rigorous program. If you get into the premium program, you're going to do a lot of studying, a lot of, getting trained on topics that you don't yet have the knowledge to fully execute on. A first-time entrepreneur's journey has a very steep learning curve, and our intent is to make that learning curve as smooth and as quick and as efficient as possible. So I hope you join the program, and look forward to working with you more in developing your businesses. Thank you very much for coming. Bye-bye.